Hi, good afternoon. Today I'm with Tuan Khairy Jamaluddin, CGS International Director, and this is a session of Khairy Meets Khairy. Welcome, KJ.
Thank you very much, Khairy.
Right. Okay. So, KJ, first of all, right at the beginning, what was your first thing on this your investment journey? The interest, or what influenced you? I mean, at what age, and what was the thing that happened?
So I was a teenager when I got interested in investing.
Right.
I came across the stock market. This was, I guess, sometime in the late, maybe early 90s.
Right.
Early
That's
90s.
an interesting time in Malaysia.
Yeah, early 90s. Late 80s, early 90s, definitely, because I knew my mother was trading through her remiser.
All right.
Those days there was no online day trading.
Yes.
And I became very interested in what she was doing. So I asked her, "What are you doing?" So she explained to me that she was trading equities, stocks basically. And so I asked her a little bit about it. So she said, "Why don't you read the newspaper?" So in those days, the Star.
Yes.
You remember this, right?
Yes,
they had
the
top
NST,
top 10,
Yes,
top
top
20
10.
most active counters. So she said, "Look at the active counters." There was no technical analysis.
Correct, yeah.
I mean, there was no internet back then for me to go and pour through the annual reports. Not that I could anyway.
Yeah.
I was still in secondary school, but I was excited to see how these counters were moving up and down, and understanding what one lot was, understanding what buying contra was those days. So I remember I tried to get enough courage to ask my mother, "Do you mind if I trade?"
Nice.
But basically using her account. I was still at the age.
Just to understand, right?
Just
how
to
it works.
understand,
Yes.
just so that I could experience it, so that I could put my money or her money where my mouth was. So she said, "Okay, but just make it. Don't buy a stock that's too expensive. One lot, reasonable price. That's fine." So I remember until today it was Idris Hydraulic. I don't know if you know Idris Hydraulic.
He was my neighbor.
Oh, okay.
My neighbor back in
And those days it was an active counter,
yes,
right?
Correct. Yeah.
And I remember I sold within the contra period, and
nice.
I made money. and I got hooked since then. So of course I still trade the market now, mainly online. I use an app to trade myself. I do have a little bit of my savings that I ask wealth manager to look after. So that's more on safer stuff, and we can go into that later. But I do pick from time to time counters myself, or I track certain indices myself, or certain commodities which I think are, because I think coming from the political world, I see the world in terms of geopolitical movements and macroeconomic movements. So the challenge for me was, how do I translate that knowledge that I have into individual counters? So this counter has something to do with minerals, for instance. I have a view on where minerals is going to go because of geopolitics. So it's a different view from what you guys do in the investment bank, maybe, but it's certainly a view that I have of the world. I've continued to be interested until today. Of course, I had to be careful when I was in cabinet, because we are privy to certain information.
Conflict of interest.
So most of the time, in fact, all of the time when I was in cabinet as a minister, I would not trade myself, because I would. You never know how that counter would be connected to anything. So I made it a point not to trade actively myself. Of course, wealth manager,
professional fund management is fine.
It's different, because that's one step removed, and I'm not giving any instructions. But now, since I've been out, I've been having a bit of fun.
And the market has been doing quite well.
Not too bad. It's been okay. I just checked my portfolio.
That's good. That's good, man. Okay, looking back at your first investment experience, right? And what are the lessons and the experience, the biggest impact that of all those years, and how that experience impact your approach today?
So obviously, when I started, as I told you just now, that was more on vibe. That was more, you know, my mother allowing me to explore and understand what the stock market was and what public markets was about. But so from there, you start building your knowledge about how to invest, and you start understanding what asset classes there are. And without getting too technical, you start understanding what your risk appetite is. So maybe when I was trading with my mother's money, my risk appetite was higher because I was just a kid. I didn't have any understanding about you know the true value of money.
Risk and return, right?
Risk and return and the true value of money. But when I started making money, when I started working and I started earning money and I started to put stuff aside, then obviously you have to try to understand your risk appetite. And I think for a lot of people starting their investment journey, it's natural, and I think it's proper for them to have a relatively conservative risk appetite. Because first of all, you're starting, you don't know what's happening, you don't know what's going on. Secondly, you are not really at the stage of even wealth preservation. You're trying to build a small nest egg, you're trying to build a small portfolio. So I think talking to people, trying to understand the asset classes, the basic asset classes, equity, debt, before you even go into the more adventurous stuff, the alternative investments,
more risky ones,
the more risky ones that people are talking about. And now, the beautiful thing now, Khairi, is that for a lot of people who are starting their investment journey, unlike us, when we were younger, you know,
we had to open the papers.
We had to open the papers, call the remiser, and the remiser will call back, say, okay, it's done. We can even use a lot of these apps that are available, and you just tell them what your risk appetite is. And you can just leave it at that, and the robo-advisor will tell you exactly how much to deposit, and just leave it with them. Or they tell you which funds are available. And if you have some view about funds, whether to invest in
certain sectors, right?
Certain sectors or certain geographical locations, more towards US equities, more commodities, or gold was in for a period, you know, shift your portfolio slightly to gold. That's for people who are maybe a little bit more adventurous, who want to move their money around the funds that are available within one platform. So I think people are a lot more lucky in terms of the tech that's available right now, and also in terms of the research that's available right now. Those days, to get research is almost impossible. You know, you have to be really, really connected, high net worth, to even have any access to research from the top securities firms or banks. But nowadays, research is
commodities, right? Just a commodity,
more freely available. And if not proprietary research, you can get stuff online. You know, most annual reports of public listed companies are available online, and you can get summaries. If you don't know how to read an annual report now, you can just put it into Claude, and Claude will tell you.
It'll tell you what to do, right?
Exactly. This is exactly how much this company is worth right now. So I think use the tools that are available right now, and at least for me, I like you, similar generation, we went through a different journey where
pre-internet, you know, all this electronic trading.
And I don't know which one is better. Maybe because we had to go through the basics. Maybe there's a different view that we have. But which is not to say that the Gen Z nowadays who use these tools, they can't have as equally profound understanding if they actually bother to do the research.
Just that now actually it's overwhelming a bit. There's abundance of information. You just have to pick and choose which one you. Okay. Thanks for that. I mean, it's interesting, you know, how things, like you mentioned, you know, before it was very manual, had to call, get things done, and now everything DIY, you know, on your bed or in a car. You just check your portfolio just now, right? You're not having to call. But you see, there's always a lot of, you know, people encounter setbacks, right? I mean, of course, in the 90s, late 90s, the economic crisis, market was down. Maybe you want to share personally if you have, some mistake that you made and the key lessons that, a key takeaway from it. I mean, what happened and how you like, oh, okay, I made a mistake, there was a loss or whatever it is, then, okay, I learned from it, okay, I'm not going to repeat that mistake again. If there's anything you want to share.
I know this advice might sound a bit boring, right?
Okay.
But you have to have a reasonable time horizon for your investment. If your time horizon is not reasonable, then you will make mistakes, and you can't dig yourself out of that mistake. But I always believe that if your risk appetite is moderate, and if you generally track indices that historically do well, then you can't really go wrong. Then that's really your wealth preservation over time. And it is a boring piece of advice, but I think you and I being in this industry, if anyone, I mean, first of all, if anybody asks us a particular counter, we will never tell you any particular counter. We've been around long enough to know that, right?
The ETFs, the indices are the best way,
we
right?
would say that.
Yes,
we would say that. But that doesn't guarantee you big returns in a year. But that's what we would fall back on.
Because I think well at night.
Look, I mean, I've made mistakes because I heard from someone who heard from someone. And we think that this is going to be
without digging enough or understanding enough,
correct,
right?
Correct. And even if we dug enough, sometimes you fall into the herd mentality. You know the herd mentality in markets, right? I mean, everyone just goes to where everyone else is going. And I've had many nightmares like that, and I've had to cut losses many times. Sometimes I just keep it on the in my portfolio because I just can't bear to cut that loss. But I've already accounted for it anyway. Many stories like that. But the best stories are when I just look at certain ETFs that have been there for the last 2-3 years and. Nothing great, sexy, but it's I'm in the money.
It gives you the peace of mind, right? So to recap, straight away, it's all about not to go, I would say, on a higher risk, and where you say it's like go for that long term, right? That's the best way to look at it, right?
Maybe just to make it a bit spicier, and I have to be very careful because you are you're CEO here. I'm on the board, and we are regulated industry.
No, we just go on the general.
But
too deep.
Let's put it this way. I think if you put the bulk, and by the bulk, I'm not going to put a percentage, but you're talking about north of 80-90% in safe stuff, right? In safe funds, whether it's equities, whether it's bonds, and there's like maybe 10 that you want to play around with. I think that's a good rule of thumb, whether it's 10 alternative or 10, maybe pick 1 or 2 stocks that you feel the momentum is moving towards that sector or towards that particular company. I think that's okay.
This is based on every individual's, right?
This is your judgment call. Correct, I can't say that 10 is 10 is mine. 10 is mine. Correct, I would say 10. I would, maybe I have enough of an appetite at about 10% of my portfolio to sort of
higher risk, riskier.
High risk. Itu pun reasonable.
Correct. I totally agree with you. So I mean, okay, let's go. But I get your point on that. Like let's keep it simple. Go for a long term, so we can sleep at night. And maybe you've been doing this for a long time as well. At individual level. For our audience, for the young Malaysians, who wants to build their wealth. Some of them probably in their early 20s. What sort of mindset that you feel the most important to develop early on? This is just for Malaysians in general.
I hesitate when I give this advice because for a lot of young people, it's very difficult to even put aside a bit right now, right? But if you are in a position, to put aside, then start building your investment as soon as you can, because really we don't have enough for post-career life. I don't want to say retirement because it sounds so sad, but post main career life. So try to start it as soon as possible. You don't know what will come your way. You don't know how many kids you're going to have. You don't know what family commitments you're going to have. You don't know what health commitments you might want to have. You might encounter in the future. So try to do that as quickly as possible. We have so many statutory investing institutions in Malaysia that do a good job. That it doesn't make it so difficult.
Great job, I would say. Great job. They've done a great job.
We are so lucky we have EPF.
Yes, correct.
We're so lucky we have EPF. We're so lucky we have PNB.
Correct.
For that matter.
I totally agree with you.
You know, and then the others that are available to some Malaysians like Tabung Haji and things like that. These institutions mostly, on most years, give you good returns. You don't really have to think about it anymore.
Positive.
So and then of course, if you are if you want more choices, there are private financial institutions that offer you mutual funds, that offer you different investment opportunities, which are very available in Malaysia.
But the keyword, start early. Right?
Start early.
And consistent, right? You have to be very consistent and disciplined, right?
I think start early, consistency, if you can. That's why I say if you can. Then my advice, and this is something that I do myself, is to schedule deduction every month. So it's already there. Because for me, to have to do it every month is additional friction.
Correct.
That you might stop. Tak payahlah this month, you know. Maybe I want to enjoy this month a bit. But if it's already auto deduct, then you know that's for my future.
It's a regular savings plan or regular investment plan. It's available now actually, right?
Right. And you know, I deploy my personal money in a couple of platforms. And I don't have much, but you know, since there's a couple of platforms, there's one that I sometimes forget. So not forget, so it's in the back of my mind. And then I check, and then I get a pleasant surprise. I'm like, oh, okay, because it's deducted monthly, and I don't think about it.
You have set it on a monthly basis.
So you know, it's grown over the last almost 10 years, and
well done.
and you know, my eldest son is going to university next year, and it's there. Alhamdulillah.
Alhamdulillah. Yes. I totally agree with you on that. Okay, since you mentioned a bit about your eldest going to uni, as a parent, how do you approach managing? You touched that a bit on your children's savings, allowances, or some of the festive seasons or holidays and anything. How do you manage that, and then how do you your conversation with your children in terms of the allowances and then investments?
Well, I think first of all, budgeting is very important,
right?
And you have to understand that as you grow, your budget changes. I think for young people, they need to appreciate this. Your budget as a single guy or single person living in an apartment shared with friends is going to be hugely different to when you get married and you start having kids. And I think a lot of people get stuck there because they're still thinking, this is my cost of living.
And it's covered.
Cost of living rises dramatically as your responsibility grows, as you become older, as the bills rack up. So I think you have to start understanding that budgeting is a very dynamic process. Secondly is when you start having children, is to try to understand for yourself and for them the value of money. I think it's very important. I'm lucky in a sense that my kids are not too materialistic. They don't really ask for much, which is a good thing. I think the new generation, they don't like to, they're not over consumers. They're quite careful about
awareness of this is different, right?
They're quite careful about overconsumption, which is a good thing. But I always have to remind them that one is that they are going to cost me over some amount of time, and that some amount of time you have to start teaching them and understanding also the time value of money.
Yes, correct.
Time value of money is important for us to understand because that guy, he's going to be with you for the next, of course, inshallah, for the lifetime, but you're going to be responsible for him for at least 20, 21, 22 years, right? So you got to start thinking about the value of your money over that 20 years.
Especially towards the final 5 years, right? That's when
it spikes.
Yes.
Right?
All right, thanks KJ. And then, to talk about this, if there's any, from your point of view, right? Is there any age parents should start discussing about money management? I mean, because in general, we on every day or sometimes keep on hearing all these scams and all kinds of things here in Malaysia, right? So at any age, but then for the parents, at what age you think is the right age for us? We're both parents.
We're lucky in Malaysia, Khairi, because our children are exposed to money from a very early age. In what form? In the form of duit raya, ang pao.
Ang pao,
I think a lot of kids in the West, they don't come across money until they're a bit later. But ours, as soon as they can go and attend an open house, they are already given an envelope.
And like incentives, right?
Right. That's where you start teaching them. Because we have this advantage that our kids are exposed to money very early on. So don't leave it as just duit raya. Leave it. Start teaching them that this is something that you menabung. Open their account so they feel a sense of ownership. Oh, I have my first account. I had that tiger when I was small.
Camel and all kinds of things.
Camel, tiger, depending on which bank you went to. And then I had a sense of ownership. I saw my savings account go up.
And we had a book last time.
We had a book. I remember we had a book. Tengok savings account ni. Tengok savings account. Now they can check online, right? And then from there, of course, try to teach them that this is their savings. It will continue to grow, and of course, it will grow when they start working. But once they start spending those savings that they have, then they have an idea about how quickly they can go.
Gone,
Then they have a sense of the value of money, because sebelum tu dia orang tak tahu. Because they're quite,
a lot of things the parents just pay for them.
Dia kedekut. Dia kata no, I'm not going to spend my savings. This is mine. I'm like, no, you want something, you pay for it lah. So I think there's no age that is too early in Malaysia, because they're exposed early on, and talk to them like adults and teach them.
All right, that's good. I think I totally agree with you on that. And then I think this is we were asking more about the family and the children, right? In terms of how do you balance, in terms of, you mentioned just now that providing for family today, because you mentioned your first going, and while planning for their long-term financial future, because some you have to keep for now because you have to spend now, but then this is going to spike in the last few years because of the college and university. So how do you balance that? How do you see that?
So I think internally you have to be able to ring fence an amount that you think is necessary for the future, and this is entirely up to you as a responsible adult human being. You have to do this if you are in a position to do so, and have the discipline to not touch it. And if you don't have the discipline not to touch it, then have a manager that can help you, so that you don't touch that. There are many ways to lock it up. There are many ways to ring fence it. There are many products that lock you into a certain period. If you feel that you tak boleh
control,
you tak boleh control. So there are many products that can be structured that are available to people that lock you in for a certain time. So I do that also. So that it in some psychological way it tells me that this is for a certain point in time, where, as you said, once the kids go to university, not many people nowadays have the opportunity to get scholarships. So just in case that doesn't happen, it's there. And this is probably the single biggest investment that you're going to make, and the most important investment that you're going to make for your child. So you have to make sure it's there.
All right. Thanks for that. All right. I think we move from on the family side at the national level, right? There are studies, this is various studies, we just speak in general, that suggest Malaysians save less than 500 ringgit per month. So I guess, we already discussed about it, it's not enough, but what would be the best way, and how do you think that this will, 500 is not enough, but what do they need to do in terms of going to look forward, like they're going to buy houses, the children's education, and then the retirement, or, post-active time.
I think one, yes, we don't save enough for post-career phase of our lives. I think this is something that EPF has consistently reminded Malaysians about. The amount of money that's available in EPF accounts, the average EPF account is just simply not enough. Again, we have to be careful because some people will say that, well, I need the money now.
Yes.
The economic pressures now are very, very high that I'm unable to save. So again, I always start by saying, if you can, and if you're in a position to do so, start thinking about putting aside that money. But also try to think about decisions where you can try to avoid. So for instance, in Malaysia, our household debt to GDP ratio is extremely high.
Correct.
80-90% plus. The last time I checked, and this is high. A lot of this is personal loans.
Lifestyle, right?
Not just mortgages, but personal loans, credit cards, debt. And of course, I understand some of that is necessity. Sometimes people have to take personal loans, have to rack up high credit card bill because they need to. But I also believe that some of it is by choice and lifestyle. And again, we have to be careful because nowadays we don't want to lecture people in changing their lifestyle. But you have to make a judgment call for yourself. Because credit card debt is not cheap debt.
BNPL as well. The buy
BNPL makes it easier for you to buy now, pay later. And I understand why these products are there. It makes it easy for people to access products. But it also creates behavioral change that can bring about long-term damage to you. So be very careful about accessing these these payment methods. And I think also make certain decisions which are informed. I always talk to people about property. Everyone has a dream about buying a home. Is it necessary for you to buy a home right now?
I think the thinking is changing now, right? Not just in Malaysia, but in
what is the opportunity cost of you buying that home rather than renting, for instance? If you rent, then maybe you have a bit more disposable income to invest, which later can grow higher than the equity in a house that you buy,
which is illiquid.
So, so people always say, oh, kalau saya beli, saya ada asset. Yes, true. But if you have disposable income from not buying, that you can invest in liquid assets that will be worth more than equity in a house later,
totally agree.
Then in the long term, you're better off.
And then
that's
there's
how people have to start
cost as well, right? Interest cost, maintenance cost, which if you rent, take away all those things, right?
That's right. That's right. So I think that mentality about I need to own a house is starting to change.
It could be sometimes, talk about a bit of generational. The baby boomers had it good run, right? So they saw that their assets did well. So then there's a pressure as the baby boomers, as a parents, like, okay, start working, buy a house now because that's what they did and they did well. But it's when it comes to this different generation and different time, right? Actually,
That's why I said, ask yourselves, do you really need it? Dulu lain lah.
Yes, correct.
I think for our generation and the generation before us, don't impose our standard of success on the new generation. Maybe our standard of success is I own a house or we own the house, therefore you should as well. Maybe it doesn't make financial sense for them.
And I think, talk about, your children, my children, at least of mine, we have that kind of conversation, they're different thinking, like you mentioned just now, about your children as well, the way they think, how they spend and everything is different, right?
They don't even want to buy a car now.
Some of them said, Uber is nice, good Grab is
exactly
enough.
Exactly.
If you could change one thing about how Malaysians think about investment and money, because the way you understand how Malaysians, the way they think in general, what would it be?
Okay, this is a serious point. I mean, apart from everything we've discussed, I am concerned about how many Malaysians fall victim to scams.
Yes, correct.
I think this is a serious point. I think if you want to invest, please invest through reputable institutions, institutions that are regulated, products that are regulated. We have some of the most world-class and stringent regulatory environment, this in Malaysia. That I think provides for a safe space for us to invest in. And there are enough products out there to invest in. But unfortunately, Malaysians, and this is of course something to do with how we regulate social media, and I think there's a lot more work that we need to do to make sure that we identify and we try to go after these schemes and scams that are happening. Malaysians still expect things quickly. They expect high returns quickly.
High returns, and we have expectations of low risk, according to them. But
low risk, high returns,
it doesn't happen that way, right?
Fast. And I'm sorry to say, from us at CGS working in this industry, that's really something completely unrealistic. I'm sorry to say.
Yeah, I know. I always say, if it's too good to be true,
it is too good to be true.
It's too good to be true, right? Okay, one last question. This is on the Malaysians, right? The financial freedom. This is something, I would say Malaysians, all of us would dream about this. But we will talk about difficult in life, on spending everything. But is it important, for example, as our structure, that our pay a bit too low, that if it's the pay structure be on the high side, that even in general Malaysians do have the extra income and can achieve this financial freedom, that our income on our side?
This is a big structural question. I do feel that we are suffering from wages that are not rising fast enough, and this is a point that economists have commented on for many years.
Correct, yeah.
I do feel that there are structural reasons why wages in Malaysia are not rising fast enough. This is a public policy question, and this is also a direct cause of why people are not investing enough. Of course, we can say lifestyle. Of course, we can say susceptible to scams. Of course, we can say financial literacy is low. But I'm realistic enough to say that one of the big reasons also is wages are not rising fast enough.
As they don't have the extra money, right?
Yeah, they don't have the extra money. And when wages don't track with the cost of living and inflation, then the disposable income that you have to spend on necessities and also the extra that you want to save, it's a bit of a squeeze. So thank you for ending on this, because as much as we want you guys to invest, we also understand the limitations that you face.
The issues that they face on a daily basis, monthly basis, right? All right, thank you so much, KJ. This is us, Khairi meets Khairi, just to discuss from personal, family, and we touch a bit at the national level or at the at the country level in terms of financials and investment. So thank you very much, KJ.
Thank you, Khairi. Thank you.
It's us today. Thank you.